Bankers, accountants, financial professionals, and insurance agents of Reddit, what's the worst nice old man when I said that? He accused me of being jealous of his winnings and that he'd show me when he deposited his millions in a different bank, then he left. I talked to my manager who then talked to the cops and they said there wasn't much they could do since it was out of state. His family even contacted us and begged us not to give him any more of his money when they found out what was going on, which we cannot legally do. The only thing we could do was close his account because we didn't want to have any responsibility in his downfall. He came in the following week. Manager explained what was going to happen, and he left with a cashier's check after quite a few more expletives. Found out a few months after that the scammers got another $50,000 out of him before his family was able to get power of attorney and control over his finances. Not sure what happened to him after that, but it's a damn shame. Had a client who was extremely wealthy about 8 years ago tell us he was no longer going to use our services. Last year we get an extremely angry phone call from his wife asking us why we haven't been filing their taxes. We showed her the paperwork where her husband said he was no longer going to use our services. And then shit hit the fan. This dude apparently just decided he wasn't going to pay taxes anymore and didn't file a return for 8 years and had been lying to his wife. They were rich and owed almost $1.4 million in taxes, not including interest and penalties. And oh yeah, they got absolutely fried by the IRS. If you are in a relationship with someone, you need to be involved in financial decisions. Never let one party handle all of the money and make all of the decisions. That is how bad things happen in both business and in relationships. Tax accountant here. Where do I begin? I had one client that had the money to pay for his kids' college without taking out any loans. Instead, he decided to take out a loan on his house to pay for college in order to claim a deduction on his tax return. When I explained to him that the benefits he'll get from claiming the interest deduction on his return would not outweigh the amount he spends on interest, he was certain I was wrong. Even after I showed him the total amount of interest he'd pay and compared that to the expected tax benefit he'd receive for it. Another client was contributing to her 401k and then pulling it out right away. She thought that this way she saved money on her taxes. What was really happening was the money was going into the 401k pre-tax, which is where she got the idea that it saved her money, and she would then pull that pre-tax money makes like $60,000 a year, and he turned down the lotto winnings. Like, if you're not going to claim the winnings because you're that against paying any sort of taxes, why bother playing the lottery at all? There are so many that they all start to blend together, but goddamn, the dumb ones are really dumb. Morals of the story: the benefits you'll get from the tax deduction will never outweigh the benefit of not having to make that payment at all. If you have no clue about tax law and you think you've discovered some loophole, you're probably wrong. If you're literally being handed $120,000 a year for just existing, fuck the tax implications and just take the fucking money. Accountant here. If you're a small business owner and your business provides you with even a remotely significant amount of income, then get a separate bank account for your business income and expenses, and never commingle your accounts. If you find that you need to make a business payment and you don't have that money in your business account but you do in your personal, then write it down in your books as money that you give the business that then gets spent on the business expense. Likewise, if you want to use your business income, pay yourself a wage or a dividend. The moment you cross your accounts is the moment that you put yourself into tremendous financial paperwork frustrations. Not an accountant, but I used to do social work that included some budget coaching. I was going over one family's monthly budget and trying to figure out how they were going to rearrange so they could pay the subsidized $10 copay for court-ordered counseling that would make or break them keeping custody of their children. Now, budget was a little tight because only the dad worked. But he was making just under double what I made for helping them with the budget. And they were living in a gross trailer park where they paid next to nothing for rent. And this was a step up from the gross motel room they had been living in before. And when I was nicely chewing them out for missing a counseling session, they were all too happy to explain the problem. Which, of course, was dad got paid on Thursdays, weekly, and the counselor had them scheduled for Tuesdays, weekly, so there was no way they would have the $10 left to pay the counselor on Tuesday. The solution to this was they had to start driving across town to pay the counselor on payday, and then drive to their, already paid for, session 5 days later. I was just getting my mind wrapped around this concept, when the mom called me all excited. She had fixed their financial problems. She refinanced their, past 12-plus-year-old, car. And she was so excited to tell me that instead of paying $385 a month, their new payments were only $115 a week. I still have no words. Best friend is a CPA, and when he had his own practice, he had some pretty big-name clients, senators, musicians, pro athletes, etc. One of the biggest mistakes people made were thinking they were smarter than an accountant. His biggest challenge were the people who heard about the sovereign citizen nonsense. To no one's surprise, a random guy on YouTube doesn't know more than an actual CPA with 40-plus years experience. At least a few of these newfound sovereign citizens ended up doing time for tax evasion. Payroll accountant. I used to work for a company with an actuarial department. There was a lovely young woman working in the call center with a master's degree in data science. She was constantly talking about how frustrated she was with making $16 an hour in a call center when she had a master's degree in data science. Yet no matter how many times I told her to apply to the actuarial team, she wouldn't do so. The actuarial team was huge about promoting within. I saw many people who wanted to learn more about what they do who had no experience whatsoever get accepted into the team because they wanted to learn. This girl was a shoo-in. And yet she never even tried despite the fact that there were always openings. She also shared with me that she was $180,000 in debt for that master's degree. Last time I checked in with her, she had left the job completely and is now in school for art. Insert facepalm emoji here. But my favorite was before I was even an accountant. I worked for a small CPA firm as a receptionist during tax time. I saw a full-grown woman sit down on the floor and start crying because she owed $900 in taxes that year when she had made about $150,000 that year. I rolled my eyes so hard that I hurt myself. Later that day I had a guy who owed $750,000 to the IRS and said woohoo. That's way less than last year. I worked for a bank. One of our branches had a customer who was basically homeless. Then, he wins the lottery. Over the next few months, the staff watched him come in to withdraw thousands of dollars every day to spend on extravagances. Everyone tried to convince him to sit with a financial advisor to help him make the most of his money. Less than a year later, he's in slightly better shape than when he started. He's at least able to live in the car he bought. I had a client who sold his house to his son way below market value. Kid had like a $250,000 mortgage on a close to $1 million house. Mom and dad moved to a condo but had to take a mortgage out on it because they didn't get enough from the house. Kid gets laid off from work and can't make his payments. He's basically Cousin Eddie and holding out for management position in his field. Dad dies and leaves mom in terrible financial shape. Mom can barely live on what she has and Sonny keeps coming around every month looking for more money to make ends meet and mom can't say no to him. I tried to explain to mom she was going to end up running out of money and possibly defaulting on the mortgage if she didn't stop, but she just wouldn't listen to me. She forced the last transaction on me and I invited her to find a new person to get advice from. It is a poor decision to pay someone for advice and then not take it. I once worked for a bankruptcy law firm as sort of a paralegal office manager. The worst client decision I saw involved a client who owned a standalone MRI clinic. This was around the 2008 recession. So I guess things weren't going well and she was filing a personal and a business bankruptcy to get out of debt. She'd financed some expensive equipment, and personally guaranteed it, just before the downturn. Business was slow, it happens. The way this would usually work, The client would turn over the financed equipment, and the contract and any remaining balance would be discharged in the bankruptcy. Well, I guess this client decided she wanted to have her cake and eat it, too. She decided she did not want to actually give back the equipment. A family member owned a similar business, so she had the family member come get the equipment, and then told the lender she had sold the machine for scrap metal. That random people from Craigslist had literally stopped by and hacked it apart for scrap, that she paid some obligations with the cash she got, and the machine was gone. Understandably, the lender was upset and smelled a rat. They filed an adversary complaint against our client and won, because the trustee did not believe this story either. An adversary complaint is basically you have tried to commit fraud using bankruptcy and this specific debt is now ineligible for discharge. She was liable for the debt, permanently. No future bankruptcy will get rid of it. It will be paid somehow, through a payment plan, or liens on any property she buys, or garnishment. This lady was on the hook for hundreds of thousands of dollars. She could have washed her hands of the whole thing, but decided to be greedy and thought she was smarter than the lender and the bankruptcy trustee, and it bit her right in the ass. Second place would be the couple who owned so many properties they couldn't remember what properties they owned. They all had some sort of tax or mortgage issue, because they literally couldn't remember how many they own, and who was on the deed, and where they were. Some were joint, some were in her name. Some were in his name, some had mortgages, some were purchased cash, some were bought with various LLCs, some were joint with random family members. Some were in foreclosure. They could not get the paperwork together for all these properties. When I left, I think they were still digging up information on lots and rental houses they'd forgotten. It was a giant mess. Don't just throw your money at real estate without keeping track of it. Subscribe for more Reddit content, hit the like button and share it with your friends. Help the channel by downloading the Brave browser. Link is in the description below. Thank you for listening.